The Dow Jones has dropped 5,000 points this week and is down 10% from its highs just a few weeks ago. Is it time to panic? I'm going to let you know coming up. What's up, everybody? Yes, so the stock market is going nuts right now. As a matter of fact, it might actually be chaotic, but I'm going to tell you what I think of the stock market right now and how you should be handling it as well, in my opinion, of course. But first, let me go ahead and welcome you to my channel. Hi, my name is Brad, and this is Own the Chaos. The stock market is a crazy and chaotic place, and I've made it my mission to help you own it. So if you want to own this crazy drop off, then please subscribe to this channel and hit that thumbs up button if you like this video as well. I certainly would appreciate it. And getting on to today's video. So what I'm going to do is I'm going to talk about why the stock market is reacting the way that it is, and then I'm going to give you some stocks to maybe look at during this time of fear and uncertainty, and then I will also give you my thoughts and opinions on what you should be doing from going forward as far as long-term investing is concerned, and so you can continue to build that portfolio up. So first things first, let me give you one statistic here. I always love giving you the facts before giving you my opinion, and here's one fact. The S&P 500 has only been down 10% in a week 4 other times since World War II. The first time, October 1987. That is when the oil crisis, people were lining up every other day based off of your license plates to try and get gas. Things were tough then in 1987. The other time, April 2000, was when the dot-com bubble burst. That was a really fundamental issue that was going on in the economy at that time. Things were way overbought, and there were some seriously overvalued IPOs going on at that time. Everybody was going public, and so that is another crucial time in our life, in our history, as far as the dot-com bubble is concerned. The next time was September 2001, which, as we all know, was when September 11 happened, when this nation was attacked, and it was the worst attack on American soil by a foreign enemy. So as you can imagine, pretty good reason as why the S&P 500 dropped so much on that day. And then finally, October 2008, the housing crisis, the recession, a huge drop off, fundamental issues there where people were given homes and given mortgages that simply just could not afford them. Prime mortgages, that was a huge thing back then. So much so that they made a video about it called The Big Short. And so huge fundamental issues within our economy as to why the S&P dropped this much back during those times. And so the question that I would ask you is this: are we in a time of our lives at this point with this COVID-19 virus where we can compare them to events such as the previous 4 that I had mentioned? And in my opinion, I would say no, not yet anyway. We're not in a pandemic situation just yet. In China, of course, there's a huge crisis there, and the economy will be impacted by that, and it already has been impacted by that. But to a point to where the U.S. is fundamentally, coming to a halt. No, we're not there yet, in my opinion. The only reason people think we're there is because of fear. The COVID-19 virus, while it is spreading worldwide, isn't anything like it was in China, and I think it's being contained rather well. There are pharmaceutical companies that are starting to deliver potential vaccines and treatments for the COVID virus. There are businesses that are already opening back up in China because they're getting things under control. And, that's probably debatable for a lot of people because people might think that China's not being very honest with that. But if Starbucks is coming out and saying that they are opening more stores in China because things are looking a little bit better, I would tend to trust Starbucks on that. And so for me, I just don't think that we are in a situation where we can draw comparisons to those events where the S&P 500 has dropped significantly like we saw in 1987, 2000, 2001, and in 2008. So what's that mean for you? Well, right now you can look at this and say, okay, well, maybe there are some stocks that are related to the coronavirus that I may want to consider taking a look at, and you would be right. So GILD is one of them. GILD announced 2 phase 3 clinical studies to measure effectiveness on medication to combat the COVID-19 virus, testing 1,000 patients at medical centers beginning in March. They have antiviral medication that has been treated on Ebola and SARS as well, which SARS is actually, kind of the family member of the COVID-19 virus. And so their hope is that they will be able to treat the virus with this medication as well. So GILD has already gone up pretty significantly and has had a pretty good pullback as well. If this medication actually proves to be effective, look for GILD to make yet another strong move in the future. The next one I would like to talk to you about is mRNA, which is Moderna. Moderna, as of Wednesday's close, it flew 60% in a week, and as they have sent the first batch of a coronavirus vaccine to the National Institute of Allergy. Their phase 1 trial is going to be taking place here in the next week or two. Moderna, along with GILD, seem to be the front runners against the virus. There are also plenty of other pharmaceutical companies that you could look at as it relates to the virus, but these two, in my opinion, are the largest ones that I would be looking at, and for the foreseeable future, because they are the ones that are looking to actually treat this virus. And there's other ones that are out there that are byproducts of this, such as APT, who primarily sells face masks, and you've seen how APT has moved considerably, but that one, in my opinion, wouldn't be one that I would hang my hat on for any period of time. The next few stocks that I would look at as far as the coronavirus is concerned, and while fear is still within people, is the stay-at-home type stocks or stay-at-home companies, or have products that all you have to do is stay at home for. Roku and Netflix come to mind. More people in the U.S. will likely decide to do things indoors to try to isolate themselves from being, exposed to the virus. So this should raise the amount of hours watched, and more people may subscribe to these services. So then that will, bring the valuation of these companies up. They've already started to see moves. Netflix has gotten almost to $400 while the rest of the market was tanking. Netflix was actually going up. So that there tells you something about these types of stocks, and those are going to be ones you're going to want to look for as long as coronavirus fears stay inflamed. Keeping to the topic of stay-at-home stocks, we'll also want to take a look at Zoom, or ticker symbol ZM. If you guys aren't familiar with Zoom, Zoom is a fantastic platform used for video conferencing. So if you are bound to your home, if you're forced to be isolated, such as the folks are in Asia, you still have to work. You still try to keep your business operational. And so how do you do that? Well, via video conferencing. This is the time that we live in right now, right? And Zoom is a fantastic platform. It's the best one that's out there, in my opinion. I actually use it for my mentorships, which, if you're interested in checking that out, links are down in the description below. I can show you how to day trade and invest and all of that good stuff. So if you're interested in that, again, check the link down in the description. And those are going to be the stocks that are related to the fear that is being put into the market at this point in time. But I really want to focus on people who are also looking to build their portfolios. I'm sure there's a lot of folks out there that are looking at their 401ks, they're looking at their long-term portfolios, and they're not really happy about it right now. A drop of 10% is pretty significant, especially if you have a large portfolio. But what I want to focus on here, and we should take a page out of Warren Buffett's book, if you have been saving up cash such as Warren has, you should have the ability now to start scaling into stocks that have come down considerably. We look at Tesla, we look at Apple, we look at AMD, we look at a lot of these other big stocks that were so valuable just a couple of weeks ago and have dropped, 30 or 40%, and it's been an unbelievable move. I still think that we've reached a point to where we are at a historic oversold levels at this point in time. And lots of times when you see a sharp overreaction like this, there is a really nice move north. So what I would expect everybody to maybe consider is to start buying in, scaling yourself in to these longer term stocks. If you have longer term portfolio, those are the types of ones that I would look for. You have Amazon, that's not going anywhere. Amazon will be back. Apple will be back. AMD will be back. Tesla's going to come back as well. You're going to look at some of these stocks and say, okay, this is a ridiculous amount of selling. I need to start scaling myself in and buying some of these stocks on the cheap, because they will be coming back, no doubt about it. And of course, at least that's my opinion. We always try to tell people that, don't buy something just because a certain individual is telling you to do that, but just look at the facts. Look at the history here. This is something that's not nearly as impactful as those other times where the stock market dropped 10% in a 5-day period, such as the crisis in 2008 or the dot-com bubble in 2000. This is not even comparable, in my opinion, to those types of situations. And so see this for what you will. Anytime that you see extreme selling, that is the time as an investor that you need to look at perhaps buying, because what do we do in the stock market? How do you win? You buy low, you sell high. And I think that we're starting to approach a really good situation here that could definitely prove to be a really good opportunity for those looking to buy in on the cheap. But those are the facts. And of course, my opinion, I know this is a little bit more of an opinionated video. It's a little bit different than I usually do them as of recently, but I thought this was important enough to just kind of address. And so if you guys agree with me, I certainly would love to hear from you. And even if you disagree with me, I would love to hear from you as well. The only thing that I would ask is that you guys try to keep it respectful in the community of comments that we have. You can say what you want about me. That doesn't really hurt my feelings a whole lot, but as far as the community is concerned, I really like to make sure that everybody's staying respectful. So I'd appreciate that. But nevertheless, I respond to all of the comments. So if you want to leave a comment down, give me your thoughts. I would love to hear from you, and I will be sure to respond to you as well. And that's going to do it for me in today's video, guys. Again, thank you so much. If you have never subscribed to this channel and you want to see more content such as this, please make sure that you're hitting that subscribe button, hit that notification bell, and I would certainly appreciate a thumbs up. As always, guys, I will see you all before the bell, and B. Smith is out. So did Elon really lie to us, or was it just a matter of the situation that occurred after those earnings reports came out? Well, if you look at when Elon made that announcement that he would not be looking to raise capital, the price of the stock was valued much lower than where it's at now. So if I bring you over to WeTradeHQ.com, it's a free platform that I've